Hi, welcome to Market Call. Our guest today, Kim Bolton of Black Swan Dexteritas, taking your questions on tech stocks. The number to call, 1-855-326-6266. Before we, and there's the email address, marketcall@bnnbloomberg.ca. Before we get to Kim, let's take a quick look at the equities. Let's kick off with that and see how stocks are performing today. Of course, tech stocks have been volatile in the session really over the past week. Yesterday we saw something of a rally for the Nasdaq in early trading. Nasdaq flat today. There is the TSX, not far short of record highs. Let me just do the old scorecard there. We got to a record on the TSX, you'll remember, was 19,357, and we got to that April 28th. 19,357 was the record high close for the TSX, and we're not far short now of that. Let's have a look at the commodities. We'll start off with oil. Oil traded yesterday close to 2-month highs. Quite a rally, getting above that $66 level. It has been losing a bit of altitude though today on just the horrifying unfolding of COVID-19 in India posting new records for deaths and cases of the virus. The Indian leader, Mr. Modi, attracting a lot of attention for what's seen as an inadequate response to the virus in that nation. Let's have a look at copper, though, because copper and iron ore on a roll once again. And iron ore hitting a record high. Bloomberg reporting that spot iron ore prices went above $200 US a ton for the first time. LIF, let's just have a look at that on the TSX. Labrador Iron Ore Royalty, it's been trading at record high levels. And why not? They don't have to run a mine, they just own a stake and they get some of the cash from Rio Tinto's giant Canadian iron ore operations. Nice work if you can get it. Labrador Iron Ore Royalty is up something like 35% this year. Let's have a look at corn, because corn has blasted to a new 8-year high today. And Bloomberg says that all around the world, this rally in crop prices is showing up in higher food prices. And of course, we in the Western world, it doesn't hurt us. Food is a tiny, well, I'm generalizing, but for most people in Canada, food is a modest part of their budget. Of course, for some people, it's a big ticket item. But in developing countries, it is an important household cost. And rising food costs have led to unrest in places such as the Middle East before. There we have it, consumers seeing little let up, as Bloomberg puts it. The UN has a World Food Index, and it has climbed for an 11th month in April. Apparently this is the biggest rally we've seen for food costs in 7 years. Now, part of it is drought. Part of it in regions such as Latin America. Part of it is China buying up heavily. Apparently they're still rebuilding their hog herd after that virus devastated it. And also, of course, the supply chain disrupted by COVID, and still, I mean, we live in this we did live in this just-in-time world. So as Bloomberg puts it, though, these rising food bills hurting consumers who are already struggling with, in many cases, lost income because of the COVID lockdowns. Oh my goodness, let's have a look. Okay, I think we'll take a break here. I just am curious to see one more stock, Canadian Natural Resources. Let's have a look at CNQ on the TSX, because it has been a star among the energy stocks in recent years. Never cut their dividend, reporting that they may have cash flow in the region, excuse me, of $6 billion this year after dividends and capex. In other words, they get the dividends and capex out of the way, and and may have free cash flow of $6 billion or so this year. I'm going to take a break. We'll be back with Kim Bolton of Black Swan Dexteritas, taking your questions on tech stocks. Okay, we're still connecting with Kim Bolton of Black Swan Dexteritas. Sorry about the delay. Let's have a look at the equity markets now once again, because the Dow has hit a record high, and the Dow transports hitting record highs as well. And of course, there was a lot of interest in classical railroad stocks. I remember for a while the Globe and Mail had a railroad industry reporter. I thought that was great. It's sort of Edwardian. I don't think they call him that anymore. There's the Dow up 41% in the past 3 years. Now, in the United States, applications for state unemployment insurance dropping to the lowest since the pandemic began. Labour market conditions continuing to improve. And did I mention this before the break? The Journal says that companies just cannot fill jobs in many parts of the States. Domino's, the boss of Domino's, complaining that they can't get drivers. Okay, we've got Kim Bolton joining us now. Kim Bolton, of course, of Black Swan Dexteritas, taking questions on tech stocks. Kim, thanks very much indeed for joining us.
A little bit of technical difficulties there, Andrew Bell.
Oh my goodness, I've been involved in a few of those myself. Tech stocks wobbling over the past week. What do you think the concern was among investors, Kim?
Well, over the last few weeks, it's been wobbling for the better part of the year. I think it had some issues with valuation, specifically over into the software side at the beginning of the year, and that got a bit of contagious valuation concerns going over into the semiconductor. And you see it again today that, the software side has a bit of hesitation. You had last night, you had Twilio come out, and that sort of hit on the back of some of these software as a service stocks that are down. Examples like Snowflake and Asana and Palantir. They're all sort of second guessing themselves. However, the rest of the market, the cloud side is doing well. Semis have recovered nicely. So I think it has a lot to do with the valuation. I think secondly, though, it's interesting that, the earnings that came out from the big mega caps last week, people are sort of thinking that, can it get any better than that? So I think it sort of induced a bit of profit taking coming in. And then, next, you've got, the next quarter of earnings coming up in July, and people are starting to talk about that there's a concern about the comparables from previous quarter and certainly going back a year.
Yeah, I mean, people are going to be looking back. Okay, you did better than the first quarter of 2020. Big deal. How did you do versus 2019?
Yeah, exactly.
Kim, we're going to take a break. It's great having you join us today. Oh, okay, we're not taking a break yet. I'm sorry. We're going to take some emails now. We want to get calls as well, especially first-time callers for Kim Bolton. We know a lot of you have been writing these tech stocks. 1-855-326-6266. And it's great to have you here, Kim. Let me get the first email. It's from Galen. Galen wants to know about Sony.
Yeah. Thanks for the call, Galen. Sony, that was one of our top picks last month. Sony Group has just got everything moving in the right direction. They're just in the right place at the right time. They've got a vertical integration model across divisions that all, stand it in very good stead as the world starts to reopen. It's targeted on the secular growth industry. It's primed to take advantage of the moves into the Internet of Things. Sony is a leader when it comes to image sensor market. It's got a 44% share. It's a market leader when it comes to game consoles with about a 64% market share. But it's also into the digital entertainment. It's it's becoming a major streaming player, and it's even developing revenue opportunities in electric vehicles. So it's just touching all the right places at the right time. We have
Oh,
a price target of $152. So it's got a long runway ahead of it there, Andrew.
okay. Nelson has sent us an email, wants to know about Converge Tech. Remind us what Converge does.
Okay. Thanks for the call. Converge is a Toronto company, and it's not that old, and it's basically its business model is about acquiring particularly software companies, and they've been doing that sort of around North America. But it really presents itself as a one-stop end-to-end IT service solution provider, and it distributes IT systems, storage devices, computer products, and software. Whoa, I just lost you there. And so we have a price target on Converge Technology Solutions of $7.85. It's currently trading at about $6.75.
Okay. Well, we're going to take a break. Kim Bolton is our guest today, taking your questions on technology stocks. 1-855-326-6266. Mark is on the line. Go ahead, please.
Yes, hello, gentlemen. My question is with regards to C3AI. The stock itself has tumbled quite a bit from its February high. It's almost down 70%. I wanted to know what Kim thought about an entry point at this particular point, and if he thought it was a good idea, what sort of sale target he might have for it. Thank you very much.
Thank you.
Thank you, Mark. I do believe we recommended C3AI back, I think it was January. Actually picking it up around 110 to 120, and then we had a price target of 140, 145. That actually worked out well for us because we got rid of it at 142. We have not ventured our way back into this artificial intelligence player. The one that we have, Mark, that we have in the portfolio is Palantir, and it just seems, although that's rolled over too, as I said at the beginning of the program, some of these software as a service type companies, AI companies, have sort of retreated today on the back of Twilio's earnings last night. So, Mark, I would recommend particularly looking at Palantir rather than C3AI.
Right. And just remind us, what do they do, these companies, again, Kim? What industry broadly?
Okay. They are really sort of the poster childs of the artificial intelligence. So they're a software as a service, but they get into the data massaging and sending it through some proprietary algorithms. The one, as I mentioned, we like Palantir. It seems to have a more solid runway in front of it versus C3AI.
Steve is standing by in Winnipeg. Go ahead, Steve.
A wonderful show, a daily viewer, occasional caller.
Thank you. Good.
I'd like to ask Mr. Bolton about ASML, or more generally, the companies that make the most advanced tools for making the most advanced semiconductors. So I've had ASML for about 3 years, bought it at around 200. They seem to have almost a monopoly in that extreme ultraviolet range, but is that all priced in, and are there perhaps better opportunities in other advanced tools? Thank you.
Thank you very much for the call, ASML. it's had quite a exceptional run, sitting up here now just around 640 off of a high of sort of 675. There are a lot of moving pieces, and you were exactly right that they're involved in the ultraviolet side of things. When it comes to the semiconductors, we look at it sort of two ways. There are designers, there are integrated device manufacturers, and then there are the foundries. We particularly like the integrated device manufacturers, as everyone knows that there is a chip shortage out there, and the integrated device manufacturers actually have their own foundries with their own designers, and so they're not beholden to the other foundries. And you've seen that actually with the designers, that some of them have come under attack because they don't have the ability to be able to do their own manufacturing, and they're dependent upon the likes of Taiwan Semiconductor, for example, which is the major supplier out there. But ASML is also an integrated device manufacturer. The ones that we like over there would be like an Infineon, servicing particularly over into the automotive side, or Micron, which is predominantly over into the memory side versus the analog. The other thing that I was going to mention is that you have the analog players and you have the digital players, and we gravitate more to the digital side, which is the memory side of things.
Okay. So, and broadly, I lost track there. Excuse me. ASMI, what exactly do they do? Where do they fit into the spectrum, Kim?
Okay. So ASML is a player as an integrated device manufacturer. So they also manufacture, but they also do their own designing. But they've really sort of, Andrew, they've carved out this ultraviolet side of things and become a leader over in that.
Oh, okay. Scott is standing by in Cambridge, Ontario. Go ahead, Scott.
Gentlemen. Yes, my question is on Marvel. And I'm just wondering, is Marvel more of a data storage, or are they getting over into the 5G play? And at today's price, at around 45 and change, would you enter a trade as a long-term hold and at this current price? Thank you so much. I'll hang up. Thanks. Bye-bye.
Thank you.
Thank you very much for the call. Marvel. We've been in it, but we hold a portfolio between 25 and 30 stocks, and there's only so many we can get in here. It's a very, very strong contender, but let me just sort of back up. Marvel Technologies, they're a leader in storage, networking, switching, and embedded processing. Back in mid-2018, they acquired a company, Cavium, which really sort of helped them when it comes to the embedded processing. And yes, they have a very, very strong connection to the 5G momentum with Samsung. They have connections with Samsung, and they have a strong partnership also with Nokia on future 5G platforms. So currently it's trading at about $45.50, and we have a price target of Marvel at $53. But Marvel has all the trends, and they'll benefit from the rise of cloud storage, increased cloud services, and the rollout of the whole 5G deployment and how that is influencing the Internet of Things.
Okay. That whole Internet of Things area is pretty amazing. The way everything is going to be connected pretty soon, as if it wasn't already. We're going to have a look at Kim Bolton's past picks after the break. He had 3 winners for you, including a 51% pop on a social media giant. We'll be right back. Kim was on our show early May of last year, May 6th of last year. Facebook was your first idea, Kim, a 51% pop.
Yep, thank you, Andrew. Wow, a lot of water's gone under the bridge in the last year, hasn't it? Facebook currently trading just shy of 318, and we still have a 12-month price target of 379. This is just a great example of one of these big mega caps in the tech side that just has, it's firing on all cylinders, but it also has a lot of places where they're still monetizing. So, they came out, they grew, they just reported last week. And daily active users were up over 8%. The monthlies were up almost 10%. They have 3.5 billion people used one of Facebook's apps back in March. So they just have, isn't that phenomenal? 3.5 billion people.
Yeah.
But then on top of that, as I mentioned, they still have some places that they can monetize. They're just rolling out that WhatsApp payments, and it just went live this week over in India, and it's received approval for launch down in Brazil. So, Facebook, it just even though it is a bit controversial, it does have some issues, particularly. Despite the whole Apple's recent iOS update, which sort of reduces Facebook's ability to track the user data, Facebook and Mr. Zuckerberg stated that they are still confident in their ability to provide personal advertisements, and so that is why they had a 45% increase in advertising year over year. Comparing the first quarter against last year's first quarter, but then. On top of that, they had a 30% increase in the average price per ad. So that's why they're doing so well, and that's why we still see them having a good long runway going ahead. Thanks, Andrew.
Okay, so is this thing about President Trump being allowed back on Facebook, I guess not commercially important, maybe politically interesting?
Well, this is only my opinion, but I think eventually they will allow him back on the social media platform. But it's still a bit controversial. And then they have that oversight board, and it's really interesting dynamic that the Facebook executives have to play with their oversight board, because the oversight board said that it's probably not appropriate. So they'll follow them, but I would imagine eventually they will give Mr. Trump his spot back.
Okay. So we're sorry, Kim, we are a bit tight for time. ServiceNow, would you buy that stock again? Remind us what they do.
Okay. So ServiceNow develops a cloud computing platform to help companies manage digital workflows for enterprise operations. It was founded back in 2003. It IPO'd in 2012. It's a fantastic company. However, it also is sort of in that space of rich valuations when it comes to the software as a service. But it's being used worldwide. I'll just give you a couple of examples. The NHS in Scotland, which is the healthcare administrator, they use ServiceNow to administer the vaccines to their 5.5 million people. There's a very large UK bank that recently reported a 70% improvement in payment processing due to the ServiceNow platform. So it's getting worldwide acceptance, but that's why it's a bit rich. We certainly own it here. And it has a 12-month price target of $600. We have a 12-month price target of $618. Currently trading at $481.
Okay, and okay,
and then
ServiceNow. Sorry, did you have a thought there, Kim?
Yeah, I was just going to mention about the third one, which is Pluralsight, if you'd like.
Okay. Would you buy this one again?
Well, unfortunately, you can't buy it because it was actually acquired by one of these private equity companies, Vista Equity Partners. So when we talked about it going back a year ago, we suggested picking it up around 16 and then buying it down at 13 and then at 10. Well, we got it at 16, never went south of that, and it got taken out by Vista Equity Partners at $22.50. Just to back up, Pluralsight is an online education company that offers a variety of video training courses for software developers, IT administrators, and creative professionals through its website. It has, it's got 70% of the Fortune 500 companies use the Pluralsight enterprise license. And that's probably why Vista Equity Partners picked it up.
Okay, we are going to take a break. Kim Bolton is taking your questions on Tech Stocks, 1-855-326-6266. Norman is standing by in Gatineau. Go ahead, please.
Andrew and Tim, thank you for taking my call. The price of Taiwan semiconductors went down significantly over the last 3 months. Would you buy it at the current price? And if you would, what would be your target price? Thank you.
Thank you.
Thank you, Normand. Taiwan Semiconductor. Currently trading at $117.34. And Normand, we have a 12-month price target of $134.50. So there's still some runway left in this. Wow, what's that? That's about a 15% lift from current levels. We own it. We've been adding to it. And let me tell you a little bit about Taiwan Semiconductor. It's the undisputed market leader of semiconductor foundries. It has a 50.5% market share. And it maintains leadership in the foundry market with it because of its advanced process technologies and its huge economies of scale that its competitors just can't come close to. It focuses solely on manufacturing customers' products, and it never competes directly with its customers by choosing not to design. So it doesn't design, it just purely manufactures. Now, Apple actually has secured 80% of TSMC's 2021 5-nanometer production, which has caused quite a ripple effect around the world, and it's sort of contributing to the chip shortage. But you can't knock Taiwan Semiconductor. They've got annual revenue growth of 20%, and on top of that, TSMC it has a dividend yield of 1.5%. So thank you very much for your inquiry, Norman.
Okay, thanks for that question. So we had Norman and Steve in Ottawa now, please. Go ahead, Steve.
Oh, thanks for taking my call, gentlemen. My call is about Cisco Systems. I bought this stock last week, partly because its valuation is halfway sane for a technology stock, and it also pays a reasonable dividend. So I'd like your thoughts on it, and also could you let us know if your company owns it? Thanks. Bye now.
Thank you.
Thanks very much for your call. Cisco, we did own it. We actually recently, in the last week, sold it out at $52.50. We had a price target of $53. So we took some money off the table. And you're right. It does have a decent dividend yield of 2.8%. Where it is really sort of, they are a massive supplier, particularly into the 5G deployment. And that's why we bought it. It was a big supplier going off into networking and switching for Nokia and also for Ericsson. And so, and it's got fantastic earnings. It keeps buying back its shares. But even at this stage, it's got, it's reached our price target, and we'd look to get back in. And I think you'll see it back into the mid-40s. But thank you very much for your question.
Sorry, going back into the mid-40s, you said, Kim?
Yeah, I think you can, if you don't own it right now, I think you can probably, before, certainly sometime this year, you're going to see an opportunity to buy it back in the mid-40s.
Okay.
Andrew, we're entering really the expansionary part of this cycle. And the reopening is pretty well baked into the market. And now you get some expansion, which is sort of mid-cycle. And then you get some volatility associated with that. And that's why I think you will see some pullbacks, and you get some opportunities to actually buy some of these stock, like a Cisco in the mid-40s.
Okay. Deirdre in Calgary, go ahead, please.
Hello. First of all, it's first-time caller, so greatly appreciate the
Excellent,
show to enter the market. And in the past, Kim, you were mentioning that you are keeping your eye and watching Unity. Currently, it's really pulled back quite a bit after you spoke, so it's somewhere $89. Are you interested in buying it right now? Thank you.
Thank you.
Thank you, Deirdre. We don't own it. But Unity is a platform which helps its customers build sort of 3D environments. And, the stock has fallen considerably, but it's growing rapidly with many avenues of revenue growth. So, it's sort of got caught up in the whole recalibration of valuations for some of these software type companies. Unity is it was actually ahead of its time because it was a software as a service stock really geared toward developers, particularly over into the gaming side of things, and especially onto the mobile side. But then, they caught the eye of the market, and it went up, and then it's just had a bit of a reality check here. But Deirdre, thank you very much for your question.
Okay, great to hear from a first-time caller as well. We're going to take a break. Kim Bolton is our guest today, taking your questions on tech stocks. We'll be right back. Billy is standing by in Mississauga, Ontario. Go ahead, Billy.
Hi, Andy. Thanks a lot. Actually, a second-time caller. I've been watching close to 20 years, actually.
Good stuff.
Yeah, thank you. Hi, Kim. Thanks for taking my question today. Just a bit of background. I've been investing for about 40 years. I've always had a bit of an aversion to purchasing shares with a high monetary value, literally dollars per share. I won't be investing in Berkshire anytime soon at $431,000. I also loathe the idea of purchasing tech or software company that has the potential to become unfashionable within a week or so. I've recently started seriously considering getting shares in Amazon and Google. I view them as virtual utilities in our daily lives. I don't know anyone that doesn't use both those companies. And I was wondering if you can help me out with a bit of an idea of which might be more preferably, which would be your pick between Amazon and Google at this point.
Thanks.
Thanks very much for your calls. It's a very interesting question. Amazon versus Google, and when I heard the question, I actually sort of looked at the price targets. We have a price target for Google of 2,700, and it's just over 2,300. That gives you a lift here of about 17%. However, Amazon, a 12-month price target we have of 4,200 versus where it's currently trading at 3,300, and that gives you about a 25% lift over the next year. So, and that's probably a result of Google having a spectacular quarter. But what I would recommend, if you have $10,000 to invest, I would put $5,000 in Amazon and $5,000 in Google, because you're right, they are part of our everyday business. Amazon, when we started Black Swan Dexteritas back in 2013, Amazon and Google were one of the first stocks that we purchased. And we picked up Amazon. I remember we bought it 8 years ago at $346, and here it is up at $3,300. And likewise for Google, I can't remember what we initially picked it up, but it was, it's become it has for us become a core holding, and the only time that we sell it is when it gets our position gets beyond that sort of 5%. So I'm not trying to take the sort of chicken's way out of it, but I would recommend that, Amazon and Google, together with Microsoft, they should always be sort of core holdings of one's technology portfolio. I hope that helps.
Okay. Let's one last quick caller, Doug in London. Excuse me, London.
Yes. Good afternoon. Kim, I was wondering if you still like and hold Qualcomm, and what your 52-week target would be in that. Thank you.
Thanks, Doug, for the call. Qualcomm, yes, we own it, and currently trading at 136 $136. Sorry, I was just looking for the. They are the major supplier when it comes to certainly the CPUs, but it's across GPUs also now. The CPUs are the processing of. The companies collect the data, and then Qualcomm's CPU processors actually send the data over to the data center, and then you have the various software companies that actually massage it. So, it is an integral part of the whole process. Now, as a price target, we have a price target, a 12-month price target of $172 versus the 136 that it's currently trading at. So that will give you, a lift here of just over 25%, Doug.
Mm-hmm. Okay, let's take a break. We'll get Kim Bolton's top picks right after this. So, Kim, your first pick is VMware. What do they do?
So, VMware is a technology company, and it's expanded into offerings providing cloud solution, network solutions, and virtualization. It's currently 81% owned by Dell. but they have announced that they're going to be spinning it off in Q4 of this year. They've had, very, very consistent earnings growth over the last number of years. But we really think VMware will rally, really driven by the inclusion of VMware into a lot of indices. They're getting a new CEO coming in. And then I think you'll see them beat and raise quarters driven by the reopening of the data centers out there. So we'd recommend, buying a position in here around the 160, 161. Buy a third here, buy a third at 145, and then if you're lucky, a final third down at 130.
Salesforce.com. You see upside here?
Yeah, absolutely. All of these names that I'm talking about are involved in both cloud computing, but edge computing. Cloud, of course, into the cloud in a central place, but edge computing because of the whole 5G deployment out there of how things are going to the edge of the Internet of Things. Salesforce.com is certainly known as a CRM solution space, but it also has a Salesforce platform as a service. So we have a price target here of 276, 12 months out. We'd recommend buying a third of a position here at 220, add to it at 210, and then down at 200.
Okay, and then your final idea, Palo Alto Networks. Remind us what they do.
Yeah, so Palo Alto is really very much the poster child when it comes to network security provider. They have these legacy on-premise businesses, and they perform very well as the network security market starts to change. And they've changed with it. They bought a group called ClaySec, and then recently they bought Bridge Crew, so they're keeping up to it. They are one of the ones that were very successful in the defense of that cyber attack on the SolarWinds Orion platform back in December of 2020. And that really sort of helped them as a catalyst of growth. For Palo Alto, we have a 12-month price target of $447. We'd recommend buying half of the position here around the 340, and then add the other half down at around 320.
And just very quickly, Kim, how is network security changing?
Well, you can just see it by the number of players in here. You have security companies that try to defend from the bad guys actually getting in. You have endpoint side, and then you have everything in between. But the ones that we particularly like are Palo Alto, CrowdStrike we very much like, and also CyberArk. But there are a number of them out there, including like a Proofpoint or a McAfee that we have on our shopping list.
We'll have to jump. Kim, thank you very much indeed for joining us.
All right, thanks very much, Andrew.
Kim Bolton of Black Swan Dexteritas. Before we go, let's take a look at the markets. Now, we have seen strength in tech stocks today. The S&P 500 itself wobbling. Actually, the Nasdaq barely ahead now. One stock that was on the... Well, let's have a look at the TSX first, see how far away it is from its record of north of 19,350 just a couple of weeks ago. TSX pretty flat on the day. One stock we're watching is Kellogg. They posted stronger than expected earnings. It's interesting, the pandemic saw a revival for some of these packaged food stocks that had been languishing before. Kellogg is just K, if I remember correctly. They increased their predictions for this year, their profit forecast for this year. So the stock drifting down there since August, but getting something of a pop today. Etsy was under pressure. Now, the online crafts marketplace, it has been under fire for some of the stuff, for not monitoring some of the stuff on its site carefully enough, see if it's legal, etc. That stock taking a hit. They did warn of slower numbers ahead, partly a revenue drop in the second quarter, partly because they got a boost a year ago from sales of these custom-made face masks. So the pandemic actually was good for them. Apple, we saw higher in early trading, along with Facebook and Alphabet. Now, one catalyst there may have been PayPal increasing its revenue projection for the year. So there is Apple, still down 3% this week, but moving up slightly. And there's Facebook, down on the week, but gaining a little bit today after increasing. The Wall Street Journal actually says that some of these payment habits people got into during the pandemic seem to be sticking. And that, of course, is great for these fintech and electronic payment companies. Thanks very much for watching our show. We will be back with Norm Levine tomorrow.